With that being said, it is 6:03. We want to be mindful of everyone's time, and we're gonna go ahead and get started. Just a couple of housekeeping items before we start the presentation. Um, the first one, just so you all know, we actually are recording this session, so we're gonna have a video that will be available. We're gonna try our best to have it ready by the end of the week, and we'll be happy and delighted to send a link to everyone. Also, our good colleagues in the marketing department will be sending a copy of all the slides for all of you. So, be on the lookout for that. And again, just want to take this time and thank you all for joining us. This particular topic that we're doing today is one that is very popular, especially because of the rates that we are able to offer here at the credit union. But before we get into that, I want to go ahead and introduce our panel for this evening. Joining us from our marketing team, we have our amazing Carrie Lazar. I know you don't see her picture, but you do see our company logo there. But she is going to be facilitating the presentation. Also, we have there she is. So you can see Carrie. Thank you, Carrie, for joining us. Also from our marketing department, we have what I like to call him pretty much the face of the credit union. He's everywhere. So I'm sure a lot of you guys are familiar with Eddie. So Eddie Villanueva, he will be keeping track of the chat and also the Q&A. So if you have any questions, anything that you want to ask as we go on as we're doing the presentation, feel free to submit your questions using the chat feature or the Q&A, and we're going to answer every question. Our commitment, like always, like we've been doing ever since we started this webinar series on every Wednesday, our commitment is that we answer every question that gets submitted. So don't be shy. We'll be happy to answer all your questions. So do not be shy to submit your questions in there. With that being said, I think you all are familiar with me by now. My name is Milton, and I'm the Membership Development Officer here at the Credit Union. And at this time, I would like to go ahead and introduce our presenter. It is not by other, our very own Kim Freely, who recently joined the Membership Development team about a month ago, and she's already making a lot of great connections with all of you. And she will be leading this presentation. So with that being said, Kim, please go ahead and take it away from me.
Thank you so much, Milton, and welcome everyone. We greatly value your business, and we really appreciate you taking a portion of your evening, spending it with your credit union. Tonight, we're going to talk about a really popular subject. We all know that CD, certificate of deposit, share certificates are right now at an all-time high, and it's a great time to invest the money that you have into a CD and try to get the best return. I think that's our whole goal, get the best return on the money that we have. So let's go ahead and dive into all you need to know about credit union share certificates. So you may ask yourself, what is a share certificate? And let's go ahead and clarify the actual verbiage. A share certificate may not be a familiar term. You've probably heard of a certificate of deposit, more commonly known as a CD. A share certificate is basically a savings account issued by a credit union that holds a fixed amount that you choose for a fixed period of time that you also choose. A CD and a share certificate are essentially the same product. The main difference is that CDs are issued by banks and share certificates are issued by credit unions. Both products are easy to obtain. They offer low deposit requirements. I can say that here at the U.S. Senate, our minimum is only $1,000. So it allows flexibility for every member, even our younger generation.
Hey, Kim, I believe you
Kim.
on mute.
Oh, Sorry, you guys, can you hear me?
Now we can.
Okay, perfect. So I was just saying that both products, a certificate of deposit, a CD, are easy to obtain, and other perks that include guaranteed return rates. Isn't that the key? Nobody wants to lose any of their money. So the guaranteed rate of return, you are going to earn dividends on the amount that you choose to deposit into your share certificate. So let's talk a little bit about the difference between banks and credit unions. I think it's important. We all know that this credit union, or you may not know, has been a credit union since 1935. And we are a sound, secure credit union. This is a credit union that you can trust to keep your money in, which is always a plus. A certificate of deposit pays interest. So you're going to have here a couple different terminologies, and a share certificate pays dividends. So as a member-owned financial institution, a credit union typically can offer better rates than banks. Certificates, of course, have a minimum balance as an initial deposit, but there is rarely a maximum balance. That means that the most of the time you can put in as much money as you like. And like I stated earlier, as little as $1,000. And this money is insured. You know, banks are insured by FDIC. The credit union is insured by NCUA, which stands for National Credit Union Administration Insurance. We're going to get into that a little more in depth later in the slideshow, because you can structure your account to where you can actually have more than that actual $250,000. Let's see. Can you maybe back up one, Carrie? There we go. So let's talk a little bit about certificate benefits. We talked about the guaranteed rate of return. We talked about the multiple term options. I think it's important for you to know that most financial institutions offer CDs from 6 months up to 5 years. The credit union does offer a shorter term, a 3-month term. So if you know within the next 3 months you're going to be going on vacation, or you're going to start planning a wedding, the 3-month term could be an option that you could benefit from. So before you invest in your share certificate, you're going to choose the amount. You're going to actually do the research. You can look at our website. You can see our rates. Right now, the credit union has the best rates in the nation on certain terms of CDs. Right now, our 2-year, 3-year, 4-year, and 5-year actually have the highest rate. So it's a great time. If you don't have all of your money here at the credit union, it's a good time to bring it over. This lets you know exactly how much money you'll earn over your CD term, whether that's months or years. In contrast, we all know rates on savings accounts and money markets are subject to change without notice. And right now, they're not the best investment for your return. The interest rate, the dividend is pretty low. So now is the best time to lock into a certificate. As long as you don't withdraw your money before the agreed upon term, you can count on receiving the full dividend. So if you put in $10,000, you're going to actually, at the end of that term, have much more than $10,000. Low deposit requirements, we already talked about. Low to no fee structure, and federally insured. We talked about that as well. So how does a certificate work? We're going to talk about certificate rates, terms, opening deposits, maturity dates, and penalties. So let's start with certificate rates. Unlike regular savings accounts, most CDs earn the same rate over time. This can be a plus if you lock into a high rate. And right now, the rates are at an all-time high. I can honestly say I remember back in 2018, 2019, the U.S. Senate Federal Credit Union had the best rate in the nation. And we had lots of consumers join our credit union from all over the U.S. To lock into those CD rates. That actually took us to be, to allow us to be a $1 billion credit union. Those rates at that time, I'm going to say were about 3.67. So right now we have rates over 5%. So now is the time to make the most of the money that you have on deposit. Let's talk about terms. We talked about it a little bit. You do have to choose a specific term that you're going to feel comfortable with when you open a certificate of deposit. And terms generally, we talked about 3 months to 5 years. We do offer a 3-month CD. And think about also, you know, children, grandchildren, with it being as low as $1,000, if you save for birthdays and Christmas and graduation, they're going to get to that little by little, a little becomes a lot, and they're going to get to that 1,000. And then you would be able to lock their money into a CD. And they could actually watch that growth, which I think is so, you know, critical and important for them to learn at a young age. Opening deposits, like I said, our minimum is only $1,000. You can open a CD for as little as $1,000. And we do offer jumbo CDs that you can put in $200,000 or more, and you're going to earn a higher rate. The maturity date is a specific date, either in months or years after you open it, and you actually choose the term that best suits your financial needs. Let's talk a little bit about CD penalties. I want to preface this with the good thing about the credit union, and I don't know other financial institutions that offer this. You can actually we allow you to take a portion. So let's say, oh my goodness, the refrigerator breaks, and you're going to need to take, I don't know what a refrigerator costs, I'm going to say $1,500 out of your $20,000 CD. You're only going to be penalized on that $1,500, which is going to be very minimal. So just know that we understand that, you know, things happen that are unexpected, and there could be a time that you may need to take a partial withdrawal. If you break the seal on the CD before the maturity date, you're likely to pay the penalty. And that penalty depends on what your term is. And again, it can be very minimal if you just have to take a portion. So CDs at a bank versus a credit union, these two, and we may have, this may be a little bit, we may have already talked about this, but I think it's important that, you know, we continue to tell you the difference between a bank and a credit union. We all know that there has been some bank failures in the past. So truly right now is the best time to move your funds from a bank to a credit union if you currently have your funds in a bank. We are safe, we are sound, we are secure. That's the best place to have your funds. So CDs have federal deposit insurance of up to $250,000. Insured by the Federal Deposit Insurance Corp, and at a credit union, insured by the National Credit Union Administration. This means you get your money back guaranteed if a financial institution were to fail, which has never happened. Banks, it has happened. So we are going to move on to how does certificate interest work. If you look at the analysis on the screen, this is based on $10,000 at 4% over a period of 5 years. So year one, that's what you would earn, $408. I mean, that's a lot of money. Look at year three, $1,274.89. So you've got your $10,000. You earned this interest. You can take that vacation and you still have your $10,000 completely intact. And it's just a win-win. Year five, interest earned $2,213.89. Again, that could be a vacation. So let's talk a little bit about certificate safety. We did that earlier, but it's really important for you to know that your funds, I mean, we work hard for our money, and you want to know that it's insured, that it's safe, that it's sound. So we do, you know, your savings, your CDs, your money markets are federally insured to at least $250,000, backed by the full faith and credit of the United States government. You can confidently save at a federally insured credit union because no member, get this, Not one single member at a credit union has ever lost a single cent from accounts insured by the NCUA. We highly recommend that you go to the Share Insurance Estimator. You can check your coverage at mycreditunion.gov. Go in, you can actually structure, we can help you structure your account to where you're insured for more than $250,000. If you have a joint account, each of you are insured for $250,000. And then if you add beneficiaries, like I have 3 children, if I add my 3 children as beneficiaries on my account, that's another $250,000 for each child. So you can have an account insured for over $1 million. You don't have to only deposit $250,000 into our credit union. So the big question, why should I invest in a certificate? I think about a big purchase coming up with a shorter time frame, like let's say a wedding. While CDs aren't the best place for your money in every situation, there are times when their security and relatively high interest rates, like right now, can make them a wise investment. For example, a CD may be a good example if we just talked about it. You have a big purchase coming up within a shorter time frame. I know personally, we just moved into a new house. It does not have a garage. So we put our money into a CD for 6 months because we know in 6 months, we're going to be building a garage. So we want to make the most of that $10,000 so that we have the extra in case we need it. You have cash you don't need anytime soon in a savings account. We see this all the time here at the credit union, a savings account that has a high deposit balance. Please look at how you're going to make the best investment for the money that you have. That's what it's all about. You have savings you want to get out of sight and out of mind. I do have to admit that I love to shop, and I love to boat. We actually have a pontoon boat and gas is pretty high. Sometimes, I have to get that money out of sight and out of mind as I prepare my monthly budget so that I don't know that it's there and I don't spend it. And all of a sudden, where's that money? And rates are high. Right now, rates are at an all-time high. We've already talked about that. And I just can't say it enough that right now, it's the time. Don't wait. Just know that if you buy a fixed rate CD, you can look at an interest rate for a guaranteed period of time. It's important to know that. When rates are high, but it's likely they'll drop soon, locking in at that high rate through a CD can be a very smart financial move. So types of certificates. Let's talk about fixed rate. This is what the U.S. Senate Federal Credit Union offers in share certificates. We offer a fixed rate. You decide how much, you decide the term, and you're going to earn the dividends compounded for that term. A bump rate. Bump rates have been so popular recently because rates have been on the rise. A bump rate certificate here at the credit union allows you to bump that rate up one time if rates go up. Doesn't change the maturity date. It doesn't change your balance. There's no penalty. It's actually a win-win. If rates go up, you get to bump that one time. Jumbo, we kind of talked about, again, $200,000 and more. Right now, though, I'll be honest with you, our 2-year CD share certificate is paying more than even our 5-year. So definitely, we're going to talk about that at the end, about going to our website, looking at the rates, and don't take my word for it as far as us having the highest rate. Go out and do your homework, Google it. You will find that we have the best rate right now in the nation on some of our terms. Individual retirement accounts. So IRAs, we're always thinking, hopefully, and planning for, someday when we do retire, that we have plenty of money to suffice our income so that we can, have a happy retirement. So that's something else we offer. You can always go to ussfcu.org/certificates. So let's talk, this is my favorite part. Let's talk a little bit about certificate investment strategies. So we're going to talk about ladders, barbells, and bullets. We want you to have the knowledge and the education that best suits your financial needs. We are here to journey with you to make your financial dreams come true. That is what we are here for. We truly care about your financial future. So investment strategies, when choosing a CD, a share certificate, you might ask yourself whether you're getting the best rate. We just talked about that. After all, once you have the CD, you are locked in for that rate for months or years. Right now, it's a win-win because the rates are so high. So there's several different strategies you can use when it comes to investing in CDs. My absolute favorite, and this is the actual strategy that my husband and I use, it's the certificate ladder. If you invest your money over 6 months, every 6 months CD, like 6 months, 12 months, 18 months, 24 months, or like you see on the screen, 12 months, 2 year, 3 year, 4 year, 5 year, you always have money coming available to you at that maturity date, just in case you need it, or you want to reinvest it in a different way. So the certificate ladder is a great resource, a great tool to use when you are wanting money always available to you. The next strategy that we're going to talk about is the certificate barbell. Think about yourself at the gym and think about as your certificate continues to grow, that barbell just gets heavier. I'd love to see this barbell, instead of having weights on it, actually has money on it, because your money's going to grow. A CD barbell involves you split an investment into short and long-term CDs. So the two ends of the CD spectrum, but no mid-range term. You don't see any mid-range on that barbell. When the short-term CD matures, you either reinvest it back into a short or long-term CD, depending on whether rates across the industry have risen. So you're going to divide your investment, say 10,000, into two share certificates. 5,000, let's say, into a 6 month and 5,000 into a 5 year. When the 6 month CD matures, you're going to check the rates. That's something that I do really recommend. Always do your homework, always do your research, always look at what rates are. If 5 year rates have gone up, reinvest that money in a 5 year CD. Or if rates haven't risen enough or at all, you're going to reinvest that 5,000 plus the interest it earned into a shorter term CD. Just makes sense. So half your funds might stay in short term share certificates a while if rates stay flat or drop. And thanks to frequent maturities, though, you can choose to put that money elsewhere. So what is a CD barbell good for? When you're waiting for the rates to rise, we talked about that. A CD barbell gives you frequent access to some cash. We talked about that too on the ladder, until you're ready to lock it in for a longer term. You also hedge bets by taking advantage of current long-term rates. Generally, the overall return tends to be an average of short and long-term CDs. But there is something I want you to remember. A CD barbell is less diversified than a CD ladder, which makes it riskier in the sense that you might miss out on a higher rate in the future. That's why I love the ladder. You put more money on the short term or long-term end of the barbell, but this might make sense only if you understand or speak to a financial advisor about how current financial markets impact the direction of CD rates. So the third strategy that we want to share with you as a resource is the certificate bullet. You can see that in front of you. A CD bullet strategy, it focuses on CDs that mature around the same date. So if you open a CD over time, you know, new terms will be shorter than the initial CD, unlike with ladders or barbells. You don't reinvest. If you only open one CD, it can technically be considered a CD bullet, as you see in front of you, 1 year, 3 year, 5 year. So here's how it can work. So say you plan to buy a house, and how exciting, in 5 years, and we offer mortgages as well. So you put money in a 5 year CD. 2 years in, you can afford to put another chunk of money into a CD, and you choose a new one that will mature around the same time as the initial CD. So 4 years in, you put more savings into another much shorter CD. Once the 5th year ends, all CDs mature. So 10,000 in a 5-year CD, 5,000 in a 3-year, 2,500 in a 1-year, the 4th year. So what a CD bullet strategy is good for. Usually you'll use the funds from a bullet CD for a big expense. And we already talked about this, like a wedding. Weddings are not cheap, you guys, at all. You have to put a deposit down, and typically a month, 2 months before, you have to pay that big balance that you owe. So great bullet strategy is great for weddings, down payments on a house. CDs tend to have higher rates than other bank accounts do, but most CDs don't allow you to add money gradually. A CD bullet strategy, though, can be the workaround for that. You can get shorter CDs over time, almost like a reverse CD ladder, to earn more interest, better dividends on funds that you saved up since the initial CD. So what to remember, this strategy has a little bit more risk, since you're not reinvesting or diversifying across longer CD terms over time. Your focus is on the future purchase, like that wedding. This risk refers to missing out on higher rates in the future, not losing money like you can when investing in stocks, though. That's the good thing about all of these strategies. You're never going to lose any of your money. So keep an eye on when your CDs mature. I want to make that, want to really emphasize that. Make sure that you know exactly when your CD is going to mature, so that when it's time to withdraw that money, you can withdraw it penalty-free. So choosing your certificate, we definitely want you to really sit down and ask yourself, what's my goal? So what is your goal? What are your objectives? How long will your money be tied up in the CD? What are the penalties for early withdrawal? What yield can you expect to earn? So what is your goal? Determine what the money is going to be saved for. If the funds are likely to be used within the next few months, a savings account or money market may be a little bit better option than a CD. But remember that we offer a 3-month CD. So you are going to earn more in even a 3-month CD than you are in a savings or a money market. So you're going to want to ask yourself, how long will your money be tied up in the CD? Consider a CD for funds that don't need to be accessible in the short term. Money meant for a near-term purchase or emergency savings should be in a liquid account. So your savings, your money market account, such as, and Elijah said that, these accounts allow you to access your funds anytime without penalty. But keep in mind, earlier in the slideshow, we talked about how USSFCU does allow you to take a partial withdrawal. So if you needed $500, you would only be penalized on that portion. Very, very important. I don't know of other financial institutions that allow you to take a portion of your CD without cashing in the whole thing, especially banks. You have to remember they have stockholders that they have to pay. So they are fee driven. We are not fee driven. So what about the penalties? We kind of talked about that a little bit, depending on how much you have. If you have to take it out and you have a large balance, your penalty may be a little bit higher than if you had a smaller balance for a shorter term. Mistakes to avoid. We want to make sure that you know exactly what you're doing. Forgetting to account for inflation. I think inflation has been typically 3-4%. And as we all know, I think it may be around 7, 8, 9%. So you definitely want to account for what your basic needs are. And don't choose the first share certificate you see. We've talked about doing your homework, do your due diligence. We want you to the whole key is to make the most out of your investment. Failure to consider penalties and more flexible alternatives. And we really have talked a lot about that. Opening a CD, it's a really simple process. It really is. But there are some stumbling blocks that can get in your way. So avoid these types of things to make sure you're maximizing your earnings and minimizing your chances of penalties. So remember to account for inflation. Don't choose the first CDA you see. And remember that there could be penalties. So that's where you want to really make sure that you're choosing a term that is best for your financial needs. So what does the U.S. Senate offer as far as share certificates? We offer the traditional. You choose the amount that you want to deposit. You choose the term. Avoid the ups and downs of the market. With this type of certificate, you know, it is a fixed rate. There's no way that you can lose any of your money. Yields are paying out at record highs. Now's the time. I can't say it enough. Now's the time. We offer individual retirement accounts. We talked about that earlier. If you have money, you know, sitting somewhere in an IRA and you're not earning as much as you would like, really take a look at that. It's really easy. You can do a direct transfer from one financial institution into another. You're not penalized. There's no tax consequence. And you don't have to have your IRA in the same financial institution. I always say, don't keep all your eggs in the same basket. So just know that you can have IRAs in more than one financial institution. The bump rate we talked about, it is what has been one of the most popular share certificates in the past year, just because rates have been going up in the past year. And it does allow you a one-time option to bump it up when rates go up. So again, it doesn't do anything to your maturity date, doesn't do anything to your balance. There's no penalty. You just call us and say, hey, I've got a bump rate certificate. The rates went up this week and I want to bump it up. And that's what happens. Just your rate changes. And remember, you know, the APR, the annual percentage rate, and then the annual percentage yield. So if you continue to allow the dividends to go into the balance of the share certificate, you're going to get a higher rate, which is always the best solution. We offer business accounts, you guys. We offer small business accounts. We have business certificates. Really excellent business accounts here at the credit union. And the good news about that is the certificate, the share certificate rates are the same as the personal accounts. So if you have a small business or you have a friend, a relative, a colleague, a neighbor that has a small business, really look at our business portfolio, because if they have it at banks, really, they are probably paying way too much in fees. I can't say it enough. We have a really good business platform. We talked about terms range from 3 months to 5 years. And you can open any of our share certificates in the suite for as little as $1,000, which I think is just amazing. It allows literally anyone to be able to make the most out of their money. So lock in one of the top rates in the nation, 5.28% for a 20-month share certificate. I believe this is for 200,000 or more, but we do have 5.18 for just $1,000, and that's just a 2-year share certificate. Now is the time. It really is. So do you need a little more guidance? I definitely want you to look at bullet number 4, because my name is Kimberly Fridley. There is my email. There is my direct line. I am going to give you a direct line to me. I can help you open your certificate. I can talk to you about the strategies. I am here to help you make the best financial decisions and, again, make your financial dreams come true. You can visit any USSFCU branch. You can send a secured message using conversations within your online banking platform, and you can call our contact center. There's the number there, 800-374-2758. And I can't say enough. I worked in the contact center for 15, almost 16 years, and you are going to get the best member service out there. Don't forget to go to our website, ussfcu.org/certificates, ussfcu.org/rates. Our online banking platform, our website, it has a wealth of knowledge. It is the best resource for you to really make the financial decisions that are important to you. So that really wraps up this. This is just a disclosure. If you're interested, this wraps up this Wednesday webinar. I mean, literally has been a privilege and honor to spend time with you. We are looking forward to the next webinar. Please go to our website. I think it's the last tab called Best Life. Webinars are there, and you can actually RSVP. And if you look at the same place, choose the tab Recorded Webinars, you will see all the past recorded webinars. This one should be available to you within 3 to 4 days. So if you have family members, colleagues, word of mouth is the best way to promote our credit union. So they feel free to share those recorded videos with them so that they can, benefit from the same information. And I hope that you have benefited from this webinar tonight. We truly value your membership here. We always say no members, no credit union. So please continue to refer your family, your friends, your colleagues, your neighbors, anyone can join our credit union and take advantage of the benefits that we offer. I hope that you all were engaged and that you have questions. If you do, you're going to put them in the Q&A, and we are going to start answering those questions now. So I'm going to turn it over to our marketing team, either Eddie or Carrie, to go ahead and start asking us those questions.
Kim, you did amazing. Thank you very much for that amazing presentation. Like I always say, I learn something new every time either you or Milton presents these webinars, and this is not the exception. I actually learned so many things about CDs that I didn't know before, and I feel excited. I feel like opening a CD tomorrow, to be honest with you. So it was a great presentation, to be honest with you. Again, thank you, Kim, for doing that. Before we go to the questions, I want to give a couple of shout outs to two of our own. First and foremost, Miss Heather Marshall is here joining us, this evening. So Heather, you're part of the team. Thank you for being, supporting us in this Wednesday webinar. And we appreciate you for your comments, your questions, and everything that you have been doing. And then last but not least, Milton, do you want to introduce that next person?
Absolutely. Well, first of all, before I do that, I just wanted to say that thank you, Kim. This has been definitely a very informative presentation, and one that we really hope that it's it makes an impact on all of our members' life, especially when we're talking about putting your money to work. Oftentimes we run into multiple members that might have money sitting down in just their savings or checking accounts where they either are getting paid very little to no interest, and so looking and exploring a product such as a share certificate. It truly is the reason why we do what we do, because we want to make sure that we're always looking up for a member. So Kim, great presentation. And with that being said, this cannot go unnoticed, but but we do have our VP of Retail Operations, our very own Troy Ferguson. Thank you so much, Troy, for joining us this evening.
All right, perfect. Thank you, Milton, for introducing Mr. Troy. It's a pleasure to have you here as well. We like when you have our very own team supporting us. So thank you, Ms. Heather, and thank you, Troy, for being here with us. But let's start with the questions. I think people are eager to know their answers, and I'm eager to learn these questions as well. So the first question, Kim or Milton, whichever, can you get a 28-month CD? I know that you talked, Kim, about that, the type of months and the terms, and you were mentioning how members can choose their term, but is 28-month CD something that we can have here at the credit union?
Absolutely. So that's the great thing about the way our certificates are structured here at the credit union, it allows you to choose your maturity date. So absolutely, if you know that you have, something coming up on a certain day, you can actually choose that maturity date. Absolutely.
All right. See, and that's what the United States Senate Federal Credit Union is very special. And I'm not saying this just because I work here, but we want to make sure that, like Kim was saying in her presentation, we want to make sure that our members are able to reach their financial goals and dreams. And whatever it takes for us to do, we will make sure that we, you tell us your idea and we'll meet you halfway and we will make it happen. Next question. Can I open a CD with a trust?
Absolutely. Oh, go ahead,
Yes.
Milton.
Yes, no, thank you. And thank you so much. And I'm sorry, Kim, I jumped in on this one, but the answer to that one is yes, 100%. Or trust accounts, we are treated as a business account. And as Kim alluded to in the presentation, we do offer, share certificates for business accounts. So a trust will come in as a business account. So yes, and even better, the rate would be the same as a personal CD share certificate.
Wow, can't beat that. I mean, if we're talking about the highest rate in the nation, if you want to make sure you take advantage of that, either for your personal CD or your business. So, wow, I mean, so many opportunities to, earn interest on money that you might have, sitting somewhere without earning no interest. Take advantage, and like Kim was emphasizing so much, and I love that she was emphasizing this, you can open a CD today only with $1,000. So, hey, take advantage of that. Next question, guys. What has the interest rate track record been in the last year?
Perfect. I'll also take that one, Kim, if you don't mind.
Yeah, go ahead. Thank you.
And so the trend has been it's been between 4.75 to 5%. That's what the track record has been when it comes to where the Feds are putting their rates. So and now there's always a little bit of noise out there that it's going to be bumped again to another 25 basis points. So we very well might be looking at a 5.25 here very soon. But so far what we've seen for the last 12 months, it's been a record. The record has been from 4.75 to 5%.
You always learn something new, huh? Because I would have never thought of that question, and then now the member brought that question up. I really like that. So thank you, Milton, for the information.
Absolutely.
The panelists are always so knowledgeable. It makes me feel like I'm the one attending the webinar, to be honest with you. So it's always great to have professional people like you all answering these questions. Either one of you, can you do auto renewal on a CD? Let's say, for example, I don't really care when it's going to mature. And then can we set up auto renewal, or is that something that we need to do manually?
You want me to take it?
Go ahead, Kim.
So our CDs are automatically set up on auto renewal. My recommendation, what will happen is about a month before your CD matures, you'll get a notice saying your certificate of deposit is maturing. We actually allow you 10 days after the maturity date without penalty to decide what you would like to do. But if you don't want to do anything at all, if you like the term, you like the way it is, you're happy with the rate, it will automatically renew.
So what you're saying is that if, let's say I have a CD that's maturing next month, and if I wanted to stop it, then I will have to contact somebody, correct?
That is correct. And please understand that it will renew at the new rate. The rate doesn't stay the same. Whatever the rate is at the time of the maturity date, that is the new rate that you will get. But it can stay in that same certificate for that same term.
Great. That's great to know, because sometimes, I was under the impression that, let's say if I just left it on auto renewal, let's say an example, the CD rate was at 4% when I opened it. And then let's say now that we're getting, let's say this 5 point something, I would think that it will renew with the old rate, but it's great to know that if it auto renews, it takes a, regardless if I say something or not, the city, takes advantage of the new rate. So that's awesome. That's great. And that's a great benefit that our members can, take advantage.
Yeah, I want to extend on that a little bit. It's also, I don't want that to scare anyone to not open a CD because we are busy. Sometimes we don't always read the mail. You can also ask at the time you set that certificate of deposit up to have it roll into your savings, your money market, or your checking. That is something internally we can set up at the time that you open it if you're worried about forgetting about it at the maturity date.
Any concerns, any questions that you may have, or if you feel a little hesitant, as Kim was saying, just reach out to, one of us, or you can call the contact center as well. We have great representatives that will give you that peace of mind that you need and explain the whole process. No matter what the question is that you have, we will make sure that you have that peace of mind. And like we always say, we want to make sure that you reach those dreams and goals, financial goals. Another question, and this can be for anybody, and it's kind of a little bit open regarding the answer, but this person is saying, I worry I won't have enough money for long-term care or medical costs not covered by my insurance. Care insurance too high. What do you recommend? So I guess what type of savings advice will you give them, even though we offer, companies that can give financial advice regarding this topic, but, just something that we can help the member to have peace of mind this evening.
Yeah, I'll be happy to take that one, Eddie. And to answer that, well, obviously that is it all depends on where you currently stand right with your finances. But definitely, if one of your concerns is that the prices increases on your insurance and all of your day-to-day cost, day-to-day expenses, I one of my recommendations that I always make to whenever I sit down and have the conversation with our members is that is to make sure that you keep some of those funds in an account that the money will be liquids, right? So and obviously you don't want to have the money sitting in a savings account because of the interest rate will be lower. But don't forget, we also offer money market accounts here at the credit union, and having your money set on a money market account, it works similar to a savings account where you're going to have a limit number of withdrawals per statement. But again, the money will be liquid, so you'll be able to access it. But then I also go back to one of the webinars that we did early on. This was about, I believe, about a month and a half or so, where we did one related to budgeting. When you prepare your budget, you can have a clear understanding as to, kind of what's going to happen in the next 12 months. And so, if you do have any additional money that you won't be needing, it will be probably looking into perhaps a 12-month CD or 24, depending right on the situation. But that might be something to look for if once you have done your budget and you have everything in order. Then that will make it easy for you to decide whether you want to have your what you have in savings locked into a term CD, or perhaps will it be best if you keep your funds into a money market, where again you will be earning a better interest rate than what you will be getting paid if you had it in a savings account, or even worse, just on a normal checking account without getting any interest.
What I would recommend, based on what Milton was saying, that's his recommendation, and we can give you recommendations as employees of the United States and the Federal Credit Union. But we also work with financial advisor companies that can give you specific detail in your advice, or if you have a certain goal that you want to accomplish, like Milton was saying, they can recommend you whether if you want to keep it in a money market or a CD. We work with GreenPath and also with Fellows. So if you're a member, you automatically qualify for benefits with these companies, and you have like a financial coach that will, put all the options for you out there for you to take advantage as much as possible of the benefits that we offer here at the credit union. So if you want to get in contact with somebody, reach out to one of our branches, contact the call center. Like Kim was saying, you can do that chat through, the online banking, whatever works for you. But we can get you in touch with one of those financial coaches, and they'll be able to give you advice on whatever it is that you need. Thank you, Milton, for that advice. Actually, I appreciate that. And then another question: if the Fed raises the rate, does USSFCU raise the rates every time,
It's a great question. That's a great question. And I'll tell you this. As many of you know, may not know this, but I'm one of the newest one in the team here. I've only been in the credit union for 6 months. And I can tell you that going back to when I started, back in December, the rates have drastically jumped from what they were in December. So long story short, Mr. Lucas, the answer is yes, we will adjust the rates, but we might not do it on a monthly basis. Oftentimes, it is very common for us to adjust the rates every quarter, every 3 months. But that is not always the case. As of recent, we have been increasing the rates, and then again, we're just looking and see, where we are and where we stand. And so, but typically, the rates will be adjusted, and that typically happens every 3 months. But because of so much of what's been going on recently, we have been able to do that, sooner than the normal 3 months that is normally done.
All right, that's great. That's a great clarification. Our senior team gets together, our financial leaders get together here in the credit union, and they study the rates and everything every 3 months. So I think that's a good habit. So that way we make sure that our members are taking the most rates as possible, because we want to make sure that you take advantage of all the savings that you have, all the money that you deposit into here at the credit union, and we want to make sure that you get your money worth. So that's really my word on that.
Yeah, and just to piggyback a little bit on what I was just mentioning as well too, Eddie, and this is something that I feel that I'm very confident, and that is that the rates that we offer here at the United States Center for Federal Credit Unions, they truly are the best rates. I mean, we have been featured actually in multiple websites as far as having the best 24-month and 36-month rates, and that again just tells you something. So even if the Feds increase the rates by 25 basis points, we don't normally do that. We normally go even above that. So again, having a financial institution like us, and in providing you with that benefit, it truly makes an impact. So again, with that being said, I know that there's a lot of financial institutions out there, but if you're looking for the best rates in the nation, again, I'm very confident of this. Of a 24-month share certificate, we have the product for you. So that's how confident we are. And it's if you go back to what I said earlier as to what the trend has been with the record with the rates, we're higher than that. If you look at it, we're definitely higher than that. And again, that just means that we are very strong when it comes to our savings rate deposits.
Perfect. Thank you. Another question. I love these questions. Please, we still have a couple more minutes, so any questions that you may have, we'll be gladly to answer. If I open a city today, and 2 days later the rate goes up, will I get that newer higher rate? I think that will depend on that type of city that you're opening, correct, Kim?
So if you choose the bump rate, you could absolutely bump it up. Once you are locked into that share certificate for that term and that rate, you are locked in. But you could open another CD at that higher rate. You could bring more money in and open another. It's only $1,000 to open a certificate.
All right, so that's a great question. You can either do the bump rate, like Kim was saying, and you can bump that rate one time, but keep in mind it's one time. So let's say that rate gets higher later on, you won't be able to do that if you do it, let's say 2 days after you open your CD. So, just be mindful of the rate that might be going up. Make sure that you look at the finances. You can call us and see if it's looking like it might go up, it might go down, and things like that. Or like Kim was saying, the alternatives, open another CD, and then you will be able to take advantage of that higher rate. Do you see any other questions on your end, Mr. Milton?
I do not, Eddie. And again, I just want to thank everyone for joining us on this webinar. And just a quick housekeeping, more of an announcement, and that is that I do know that we do our webinars every Wednesday, but due to some conflicts with our schedule for next week. We're going to be taking a break. So we're going to resume with our webinars on June 21st. And that is going to be a topic that will be presented by our lending department. And that is, it's going to be on keys to home buying. So again, we want to give you all the heads up. So we are going to be taking a break next week, but we're going to return again on June 21st. And our webinar will be around keys to home buying that will be presented by our lending department. We have our senior loan officer that will be doing that presentation for all of you. And again, just want to take this opportunity to thank you all for making time and coming in on board and listening to this this webinar. And we look forward to having you back on another one. And again, like I said, we will resume on June 21st. So with that being said, if we don't have any more questions, I just want to say thank you, Kim. Great presentation. Carrie, like always, you're amazing. Eddie, thank you so much. Heather and Troy, thank you all for joining us. And we'll see you on the next one.
So I hate to interrupt, but I do think we had one last question. I apologize if we already answered it, but I think it's really important that someone asked to clarify, I would never lose any funds below my deposit amount. You would never lose any funds below your deposit amount. I think it's very important to know that we do not offer variable rate share certificates where you could lose any of your money.
Thank you, Kim. I appreciate you. We needed that lady touch because they look at the details, so thank you very much for that, Kim. With that being said, I think that was the last question. That's important. Once again, you will never lose money, below your deposit amount. So that's a great key component to take away with you. And like Milton was saying, thank you, everybody. Milton, as usual, great job. Kim, fantastic job. Thank you, Carrie, for the great content that you always provide. And Troy, thank you for your leadership. And Heather, thank you for leadership as well. And we'll see you in 2 weeks. So have a great night, everybody. And we'll see you later.
Even if you do an early withdraw, though, sorry, I'm just reading the chat. I know most people are gone, but that is true. If you early withdraw, you'll get penalized, though.
Yeah, I can kind of piggyback on that one. So it depends, Mr. Lucas. So it truly depends. If you happen to break the CD at an early term, then there might be a penalty that might go into the principal. That would be the only time that if you do break the CD early, very early. But other than that, but again, it's a very small percentage that will be penalized from the principal. If you do, for instance, if you set up a 60 months CD as an example, and you decide to break in 3 months, then that penalty might go towards your principal might be touched if that is the case. Sorry for that little bit of like confusion in there.
Mr. Lucas, if you're still here, what do you want to learn about? What other webinars should we have? Or you can email it to me. You guys don't have to stay. I didn't get to be on camera all night long, but we'll let them go. And I'll send out the IRAs. Good.
All right. That's a great.
Mary, we have an IRA expert in-house. She's amazing. And Mr. Lucas, we have a tool on our website. Rules, this tool, Retirement Central, ussfcu.org/IRAs. There's a Retirement Central tool in there. It's really great. You can find all sorts of stuff and rules on there, but yes, IRAs. I'm Carrie. Marketing. Okay. All right. No, that's okay. I like how I'll go buy anything. All right. Everybody have a good night.
Thank you so much. Bye-bye.